Hi traders, Jeffrey here again from Strategic Day Traders, back again with another recap of our week's results, a look at the news last week and the news coming up this week, and a little review of the strategy that I follow and what my Telegram signals look like. Before we get started, all the information provided here is for educational purposes only, and it's not an offer or recommendation to trade futures, stocks, options, or Forex. So this is a very simple strategy that I follow and have for many years. It works beautifully for currency pairs, for currency futures, oil and gold. The movement of those instruments follows a typical parabolic move as it comes down. When we have a move outside of our limiting envelope, we expect to see a huge reversal in the opposite direction. In many cases, those reversals are driven by institutional trades, and we are basically following the movement that we can anticipate. If you look at this chart, this one happens to be on MetaTrader, but we can set up our indicators on any of the platforms. Number one, I like to switch to Heikin-Ashi candles because that obviously shows trending movements at a glance very easily. These outside envelopes are from the Nadaraya-Watson indicator, and in this case, I just have two instances of the indicator on the chart. The first one is the straight out of the box settings. And the second one, I've changed it a little bit just to get some extreme movements as well. And then I always have supply and demand zones on my chart, as well as a stochastic RSI, or really any oscillator that can show you overbought and oversold, overbought and oversold activity. And in order to track the movement of a trend, I like to use the Williams %R. So that when we are in a long trend and we're in the channel up above, we're going to continue to stay in it and just look for any movements before getting a sense that we're coming to the end of that trending movement. Same thing for the channel below. All of these indicators are free and they're available for any of the different platforms. Now the strategy is a simple one. I'm going to analyze all 28 currency pairs, the major currency pairs as well as the minors. I stay away from the exotics, and I get a bias after the day's activity and the news that has already been released and the upcoming news that is coming out. I get an early view of currency movement, trading volume, supply and demand on all of the different pairs, and of the 28 pairs, I form a bias for the next 4 to 6, 8 to 12, sometimes as long as 12 to 24 hours, whether or not I'm looking to go long or short. Ideally, I'd like to get a pullback before going either long or short, and then hit my first high probability target, and then keep a runner on. So if we're looking for trade entries, I'm always going to be looking for a movement to the outside of the envelope, looking for something like this outside bar here or these outside bars here. And when they come off of a supply or a demand zone, and we get here's a perfect example, we get a fade off of the zone, that is an extra bit of confluence to tell you that the trade is going to move up in the opposite direction. Okay, in this case, we had a supply zone right above and we bounced off it before finally breaking through and coming to the opposite side of the zone. I'm going to be monitoring the supply and demand zones as well as overbought and oversold conditions to optimize that pullback entry. But when I put out my signals on Telegram, I've already looked at the charts, looked at the strategy setup, and given you a trade idea that you can either enter at market, put the lines on your charts, and enter close to near those entry points when possible, and then even put your automatic take profits and runners after you enter the trade and just let them run. My first target is always going to be a high probability, so if I'm at the outside bar down here, I will look to have a first target up at the opposite end of the envelope. And when I trail my runners, sometimes I trail them either based on price, a certain number of ticks or points, or attaching it directly to an indicator. For example, this is the linear regression moving average, and sometimes I will look to attach it to the linear regression moving average so that when we get a cross below, then it'll take me out of my runner. Now here's what the signals look like. For example, a couple of weeks ago, I put this signal out on the evening of the 17th, and these are ideal entry points. So these were all pullbacks to go long with a stop loss and a target. And if we look at this one, for example, the AUD here is the result from the following day. We got our pullback entry, 95,802, and our target initially 96,266. And then a runner, we got a total of about 83 pips out of this one pair. And if you were trading half of a full lot, that's nearly about 300 bucks. Now you can choose to take one or any of these. You can take them at market. You can take them on the pullback trade. I would suggest that you start off in sim and get a feeling for how these trade ideas work for you, and apply it to your own trading style. This is what the chart looks like. For example, in this particular trade, we're looking at the EUR, NZD, the Euro New Zealand dollar, or the Kiwi. And in this case, we had a short entry suggested at 77477. So that's right over here. This vertical line here is when I put my trade idea post out on Telegram. So price was right about here, okay? What we're looking for is a movement as price continues up toward the entry point. So we had a little bit of movement up and down. We finally got our entry right around here. We hit our first high probability target right here, and then this just kept running. By the time it kept running, it was already through the London session up until the New York session, and we just kept moving our target all the way down for almost 100 pips on this one trade. Now here's what we looked at this past week before I show you the results. We had a lot of interesting news that came out on Tuesday. We had some the consumer confidence level as well as job openings in the U.S. CPI results from Australia. The Australian dollar did a lot of big moves this week. On Wednesday, the Bank of Japan was publishing some interest rate information. And then as we came to a close of this kind of impactful week, just in advance of the U.S. presidential election, we had the core PCE, another measure of U.S. inflation, as well as early unemployment claims. So those results were relatively fair. And then the following day, we had some unemployment news, which was kind of unexpectedly not so favorable. So we had a lot of conflicting news this past week, and the market showed a lot of movement as a result. We had a couple of great trades and a couple of reversals that were unexpected. Here are the results. As you can see, we had a number of trades that we actually didn't get our entry. So unless I feel strongly that a trade is already moving, has a lot of momentum, I may not enter at market. I'm going to wait for that pullback, and sometimes you'll miss a trade if you don't have if you wait for the pullback. Better than a loser. If you don't get your entry, you wait for the next one. But in this case, I think we had about 13, 14 signals, and some of them were terrific. For example, we had a 300 pip trade right here with the pound Australian dollar. But we had a couple of days that we had some losers as well. Excuse me, just one day. On Friday, after that unexpected jobs report coming into the end of the week, we did have an overall losing day. But if you add all the 5 days up of signals, we still had a net positive number of pips of almost 700 pips. If you were only trading a micro lot, 0.1, then that was an easy $400 or $500. If you're trading a half of a lot, if you have a bigger account size, then you did quite well. So even in the face of a couple of losing pairs on one particular day, the overall strategy really was a net very positive win. Here's what we've got coming up this week. Remember, we have daylight savings time shifting in Canada and the U.S. On Monday, we've got some Australian interest rate news. Tuesday is election day in the U.S. Tuesday evening, expect, based on big movements in declaring certain states for one candidate or the other, big volatile moves in the market. If you're trading futures, be ultra careful. Some people like the excitement of trading on presidential election night, in particular futures, or even currency pairs, but I urge caution. I have seen unbelievable swings from moment to moment based on different newscast results. And then later on in the day, at the end of the afternoon U.S. time, we'll see some labor news out of New Zealand. And on Thursday, in the UK, we've got interest rate news. And then because of the holiday on Tuesday, we've got U.S. Fed reporting one day off. Usually they report on Wednesdays, but in this case it's going to be Thursday. And we'll see whether or not after the election we have some unexpected interest rate announcements. Okay, guys, so that is it. It's a brief recap of how we did this week. A great 659 pips altogether. If you have any questions about joining my group, feel free to email me. You can go to strategicdaytraders.com and just click on any of the information pages to find out about how you can get into my private Telegram group and get signals like these every evening between 6 and 8 p.m. And we'll be starting some pre-New York session signals as well, just based on price action for some quick scalps over the next couple of hours in the New York session within the next couple of weeks' time. And if you'd like to see some posts, this is the free Telegram channel. If you'd like to enter it, the link will be in the description as well. Feel free to join there, and you can watch some signals that I will post how we did during the week, and also get back to me with any other questions. That's it for now. Good being with you. We'll see you in the next one, and good trading.